To this afternoon webinar, at least afternoon here in the Europe area. In other continents, maybe it's later night or early morning, depends where you're watching us from. For those who see me for first time, my name is Theo, and I would like to welcome you to this webinar. I'm here to introduce you to your host, Paul. And hello, Raquel. Raquel, hello. Oh, it's nice to see you here as well. And Paul will go through price action setups that really they can transform entirely your trading activities. So, ladies and gentlemen, before I pass it on to Paul, I would like to make sure that you all know about our social media that you can use in your advantage. I'll start with the YouTube channels. Please make sure you subscribe on the YouTube channel, you enable your notifications button, so every time we post something, we upload something, it's going to be easier for you to get notified. I will share with you the link. The first link is the YouTube. Then if you scroll down a little bit here at the trading spotlight, you can see all of the webinars we do, myself, Paul, and Jens. And in case you miss some of the price action webinar from Paul, you can find it here at the trading spotlight. Then, ladies and gentlemen, we have the Admirals Global Instagram page, where we post many reels, many stories, everything informative in terms of trading. So I will definitely encourage you. Here is Paul in many reels here. I will definitely encourage you to follow us on Instagram, because you get so much valuable content. And the last one, it's the Admirals, the one I would like you to make sure that you follow, because here we recently enabled also the messaging activity. And of course, many, not only trading ideas, but in terms of fundamental chart analysis, it's really good. We put it here. So in my opinion, it's one of the best channels as well to be engaged to. Hello, Paul. How are you today?
Good afternoon, Theo. I'm very well, thank you. How are you?
I'm very well, thank you. It's been an honor and pleasure to introduce you to this webinar today. So I'm sure the audience, they're going to get lots and lots of valuable information, and hopefully we're going to see some people transforming their entire trading activity, come to the realization, they say, yes, I make it. I watched Paul's webinars and it was very informative and guided.
Absolutely. Thank you for that. Thank you for those kind words, Theo.
Very welcome, and always pleasure to introduce you, Paul. So just please make sure you share your screen, so to know everything is fine. Oh, great.
We're in business.
Thank you.
Thank you, Theo. Thank you for those kind words and that introduction. Good afternoon, everybody. Great to see you here for what is session 9 here of our price action trading guide. Okay, and today we're going to talk about building your trading plan, something that perhaps new traders don't always fully understand or sort of embrace. But what I'm here today to help you sort of discover and understand is how you can do it, why it's important, and what we can take away from that. So fabulous to see you all here. Fabulous to see you joining us. As always, I appreciate that we have a wide range of experience of people who join us for our sessions, from complete beginners to intermediate and advanced traders. You're all very welcome. You'll all have something here that you can take away. If there's questions, you can always put them in the chat box there. And also, I appreciate we have a truly global audience. So wherever you're joining us from in the world, it's fabulous for you to be here. We here, myself and everyone here at Admirals, hope that that you're having a good 2022 and enjoying these rather eventful and interesting markets, ladies and gentlemen. So remember here of us at Admirals, Forex and CFD brokers with, lots of instruments for you to trade, global presence with local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you the opportunity to engage with markets using both MT4 MT5 and also the Admirals Supreme Edition. If you've got any questions about Admirals, please get in touch with your account representative and they'll be very happy to help you. So what we're going to talk about today, as always, we'll talk a little bit about what is price action trading, because I do appreciate that there are people joining us who are completely new to trading. We're going to talk about trading plans, right? Why do we need them? Okay, why do we need one if we're trading using price action? You know, what's the importance of it? I can assure you that it is unbelievably important. Okay, and I will come more onto that as we go deeper into this particular session. We'll talk a little bit about what types it are and what it should consist of, and how do we use one in price action trading, right? And then what we'll do is we'll have a look at live markets. So be sure to stay with us till the very end, because what we'll do is we'll start to have a little look and a chat about what's going on in the markets at the moment and what kind of price action elements we can start to pick up and see. So Raquel says, this is great. I've done a rough draft, so hopefully this session will help me to fine tune it. Excellent, Raquel. That's fantastic. That's brilliant. I'm really pleased to hear you've done that as a starter. The important thing is, as you'll hear me talk consistently about, not only today but in other sessions, is that it doesn't have to be perfect. Okay, it doesn't have to be a huge thick tome. All right, it can be one page, especially if you're a tactical trading plan, which we're going to focus on today. The important thing is you start. Okay, and we'll talk about it. Okay, and I'll talk about my experience from my own trading plan, from working on trading floors, from working with lots of traders and coaching and mentoring over the years. Okay, and what is important about it. As I said, for those who don't know me, my name's Paul. I've traded for many years. I've traded for funds, traded for clients. Okay, I like to focus on FX indices and commodities for my own trading. I tend to be a trend trader for my sort of swing and position trades, and I tend to be a reversal trader for my short-term intraday trading. So, as the intro slide says, we're here to continue our new series based on helping traders understand and utilize price action in their traders, because it's very easy for beginner traders to be a bit intimidated by the amount of knowledge required to be able to analyze the markets. However, with a little bit of education, a little bit of understanding of candlesticks, price action, markets in general, then it becomes easy to analyze and understand those markets. So what's going to happen is each Wednesday will build upon the previous session, so that you're educated and informed how to use price action in your trading. And what I've been doing is, we'll have kind of like, 1 week will be a very technical week, as in we'll be talking about, setups, we'll be talking about support and resistance levels, we'll be talking about fractals, we'll be talking about how to trade. And then, each other week we'll be doing like today, which is about the kind of the ecosystem. All right, the ecosystem you need to build around your trading to turn it from, you just being, like a hobbyist trader into being, a trader with a business, because that's actually where, that's where you need to be. So, there's lots of different elements we can pull together, with lots of fantastic pieces on price action itself, but also the elements that will actually help you raise and elevate yourself as a trader to become the best trader that you possibly can be, which is exactly what I want for you, from these particular sessions. So for those of you joining us for the very first time, all right, when we talk about price action trading, if you're a very new trader, you might not fully understand it, is that it's a basic means of market analysis using price movement over time, which is both popular with retail and institutional traders. And we are analyzing the changes in prices over time, the action, that's what it is. And what we will be mostly doing is typically focusing on price action over the last 3 to 6 months, right? But respecting longer term and shorter term price movements. The reason being for that is that I recognize that the people who join us for our sessions, or who are watching this later on demand on the Admirals YouTube or Facebook channel, very often they will probably be trading around a day job or other lifestyle commitments that they may have. So, they may actually only have like an hour or 2 hours a day to contribute to their trading. So they might be trading longer term things like weekly charts, daily charts, maybe 4-hourly charts. So we will focus on that, because I want people to be able to recognize and utilize that in their own trading. But what you will find, and you'll hear me, say it every week, is that, what I share with you in terms of, trading setups, ideas, concepts, etc., they are, applicable across all time frames and all instruments. So you'll be able to take them away and utilize them in your own trading from tomorrow. And that's what we're hoping to share with you in this series. So, what have we talked about so previously? And, as I said, we're trying to build every week, and we're trying to have a mix of price action itself, and also, as I said, the kind of the good bits around the side. Okay, the soft skills of trading to actually as you go deeper into your trading journey, you will realize are unbelievably important. So we've talked about price action trading. We've talked about, in terms of setups, engulfing candles, star formations, key reversals, pin bar formations. Okay, lots of very simple price action setups. They are all available on the Admirals channel, which Theo showed at the intro. So if you've missed them, or if you had questions about them, please make sure that you go back and check them, because there'll be lots of good information for you there. But we've also talked about things like identifying trends, preparing yourself, getting ready for opportunity in markets, managing risk. And today we're going to talk about building a trading plan, and I'll show you how we split it up, but that's what we're going to do, so that you can start to work on being the best trader that you can be. So those of you who will have joined me on this particular series, or any of the other webinars that we've provided for Admirals, you will always hear me talk about stressing from day one is that it's important to follow your plan. Okay. New traders, they tend to get maybe a little bit excited, a little bit over excitable, because there's lots happening. They're learning new skills, they're learning new trades, they're getting insight into financial markets. But the reality is that there's three things you always need to be doing as a trader: plan your trades, trade your plan, manage your risk. Those are three things that you always have in control. Right? Markets are big, they're dynamic, they're fast moving. Okay. You can't control markets, even if you think you can. I can assure you, ladies and gentlemen, despite your best efforts, you will not be able to. Nobody can. But what you can control is you can plan your trade. You can trade that plan and ensure that you manage your risk. Those are three things that you can control every single trade, in every single session, every single day, and every single week. And if you're doing those things, you are starting to shift yourself towards being the best trader that you can be. It's not all about finding the quickest, easiest, sort of trade setup. There's more to it. Plan your trades, trade your plan, manage your risk. Those are three things that you always have in control. Those are three things that you should always be looking to do to the best of your ability. So what can help you with that is about having a trading plan. And what I suggest is that you have two. Okay, you can have a strategic business plan, okay, which is what any good business would have, right? Any good business, whether you are Apple or whether you are ExxonMobil, energy company, or BP, okay, or Zoom, all right, whatever, okay. A good business will have a good strategic business plan. But what you should also have as a trader is a tactical trading plan, okay? And that's what we'll focus a little bit on today. And we're going to do bits of it, because I'm going to add more and more to it. I'm not going to just completely overwhelm you. I want you to be able to start, all right? And this is about how you engage with the markets day to day. It's, I talk about having like a 10-step tactical trading plan, which I'll share in a couple of sessions time. But a tactical trading plan can just simply be a small piece of paper that you could have by your laptop, on your knee, on your tablet, okay, next to you, that allows you to effectively ensure that you're doing those three things: planning your trades, trading your plan, managing your risk. All right, that's what we want to be doing. That's what we want to be focusing on. And having that tactical trading plan starts to become very, very important. So, you'll hear me talk a lot about strategy and tactics throughout this series. It's a great quote from Sun Tzu, okay, the legendary Chinese general. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. He wrote that book, what is it, maybe 3,000 to 5,000 years ago, and it is as prevalent and as useful today as it was then. Okay, I see lots of traders who might have a strategy, but their tactics are very are nebulous, no use whatsoever, and so they are just grinding their way to nowhere. But on the flip side, I also see traders who have a tactic, okay, but they have no overall strategy. And as he says, that's the noise before defeat. So last week we talked about trading the pin bar formation. So to me, if you just trade a pin bar, that is a tactic. Okay, that's a tactic. Okay, and that's fine. But if you don't have it within, okay, an overall greater strategy, well, as it says, there's the noise before defeat. Okay, and we kind of talked about that last week. Is that just a pin bar on its own, in price action, okay, right? But what we're looking for is, as a strategy, is we want a confluence of events. We want 2, 3, 4 things all coming together at one time and place that puts the trade on. All right, that's what we're looking for. So, if you're new to trading, if you're nothing, you might be saying, well, that's all well and good, Paul, but why bother with one for trading? All I want to do is trade pin bars. All I want to do is trade engulfing candles. I don't need one. let me assure you from my own experience as a trader, from working on trading floors, from coaching and mentoring hundreds, perhaps thousands of traders over the years, all right, all the traders that I have worked with who have been consistently long-term successful, they've always managed risk and they have always had a good trading plan, which they have been able to follow, right? Traders without trading plans, they will have periods of success, right? They might have periods to do well, but not long term, okay? Because what you find is, especially for intraday traders, is that without a trading plan, both a tactical trading plan and a strategic business plan, traders, they get overconfident, all right? They overconfident. If they've had a couple of wins, they start feeling a bit overconfident, or they get a bit bored, all right? They need a bit of variety, okay? They're just bored of trading the one instrument, okay, on their one time frame. Start to have a need for excitement, okay? Especially intraday traders, they just start to think, well, yeah, look at all these markets moving, everything's moving, I want a bit of excitement, okay? And there's also feel that they need to be trading, okay? I need to be trading. Most of us, all right, have been through let's say an industrial age education system, okay, whereby you are expected to be working from 9 in the morning till 5 in the evening. You're expected to be doing 40-hour a week. You're expected to do fair day's work for a fair day's pay, okay? And so trading doesn't work like that. Trading is a performance activity. You are paid to perform, not to turn up. All right, you're expected to turn up. You're paid to perform. You have to perform at your best, and that performing at your best might be 2 hours of the day, might be 1 hour of the day, okay, that where you're focused and you deliver and you work on that, okay? But as I said, people they feel that they need to be working, they need to be trading. If they're not putting trades on, how can they call themselves a trader? All right, so they find themselves getting impulsive. They start breaking their plan, they're breaking their rules. They start leading, as I said, a bit of excitement, a bit of variety. All right, they feel that they need to be trading, and none of that is actually relevant, okay? You are paid to deliver, that you're paid to trade the best you possibly can be. If you join the Admirals webinars with Dr. Alexander Elder, if you've ever read any of his books, okay, it is your job, right? It is your job to trade well in terms of in line with your plan. That the market will decide when and if you get paid, okay? It's your job to trade well, right? It's not your job to make money. It's your job to trade well. And you trade well when you have a simple plan that you follow. So that's all well and good, but how do we start to build that into a very simple price action trading plan? Well, as I said, it can be just literally a simple piece of paper next to you, or maybe you have a little notes on one of your tablets, and you can start to do it. My important thing is start it. It doesn't need to be perfect, because what's going to happen is, as you review it, you'll tweak it, you'll refine it, you'll tighten it up, you'll make it more focused, okay? It does not need to be perfect on day one. If anything, it can't be perfect on day one. Excuse me. It can't be perfect, all right? So don't do it, but the important thing is you start, okay? And maybe you don't really know or understand what you're doing. That's fine. That's what these sessions are for. You can ask questions. That's all about, okay? One of the things that helps us when we're starting to build things like a price action trading plan is that price action trading plan generally tend to be clean charts, okay? Mine are a little bit scruffier. We have a stripped down approach to trading. It makes it easier for traders dealing with issues like analysis paralysis, all right? So very often I see new traders, and what they have is, they will just have, they'll have, dozens and dozens and dozens of indicators on their charts. Okay, they've got 20 different moving averages, and they'll have Keltner channels, and they'll have a squeeze, and they'll have a Bollinger Band. Okay, and they'll have lots of oscillators. All right, they'll have CCI, they'll have RSI. Okay, they'll have MACD, they'll have stochastic. All right, they'll have ATR, they'll have and actually suddenly you look at the chart, and actually they contact me and say, Paul, I can't take a trade, I don't know what to do. And I look at how their charts are set up, and I can't take a trade either, because there's just too much information. And so the charts have become just absolutely overwhelmed with data. The human brain tends to be able to deal with about 5 to 9 bits of data at a time. So let's call it 7, all right? So if you've got a chart which has got price moving, okay, price over time, and you've also got 20 odd other different indicators, it's no surprise that traders, start to feel a bit of analysis paralysis. Okay, less is more. All right, less is more. Okay, I try to sort of get that through as much as I can, but less is more when it comes to your trading. Okay, so part one, what do we need to do, okay, for the tactical trading plan, for price action trading plan? Well, you know, the first thing I want to do is when I open a chart is I want to start to identify price levels that where we believe price will react, okay, and that is what provides us with an opportunity. I think of it as what I would probably call inflection points, namely they are points at where, you know, the market is going to have to make a decision. And that's what I'm looking for, okay? So, you know, just have a simple trading plan, okay? It's very simple. That whenever I open a chart, all right, whatever that chart is, start the monthly, then the weekly and the day, and all I do is I just draw in horizontal levels of support and resistance, dynamic levels of support resistance, which to me, okay, is a particular moving averages, which we'll talk about, which is, you know, a kind of an overlay on top of price action, but I think it can sometimes help some traders, okay, just to begin with if they use them properly, but also things like big round numbers. And when we switch to the live charts, okay, in a short while, you'll be able to see a kind of the effects of those big round numbers. They are important. So we want to know where they are, when they are, okay, because actually, as I said, you know, these are points at which markets are going to have to make a decision. And what might happen is it might give us a price action trigger that gives us, you know, an indication of what the market is likely to do, you know, and a way we want to move with it. You know, what we'll do is we'll dig in and over these next couple of months, we'll build this price action trading plan. But, you know, ultimately, you know, what we want to be doing ideally is that, you know, if there's an uptrend, we want to be buying, you know, we want to be buying at support. If there is a downtrend, we want to be selling at rallies, selling rallies at resistance, okay? We just want to keep it nice and simple, ladies and gentlemen, all right? That's all we want to do, okay? As I said earlier, less is more, all right? Human beings, and I have to say, men in particular, we tend to overcomplicate things, all right? We tend to make things more complicated than they need to be. And I've been as guilty as the next man of that, okay, over the years. Guilty as the next man, all right? I put my hand up for that, no bother at all. But, you know, with time, and then you strip away, you can get less and less and less on your charts, and, you know, and you're able to just make your decisions and move with the trade. So if we've done part one, which is basically identifying your significant levels of support resistance from monthly, weekly, daily, and the next part, okay, which we'll focus on today, is we need a few price action triggers, okay? So things like key day reversals, star formations, engulfing candles, inside bars, pin bars. All of those we have covered so far, okay, in previous sessions, apart from the inside bar, which I think is next week, okay? So be sure to join us for that. So we need some very simple price action triggers. Remember what I always said about candlesticks, okay, and price action, namely that a candlestick in itself is a reversal pattern. What's important to remember is that it needs to have something to reverse, okay? What you'll find is candlesticks, price action candlesticks, in, you know, in significant sort of, let's say, zones of congestion, they lose their importance, they lose their value, okay? It is, we see them at the end of particular moves, trends. Maybe it's a big long trend, maybe it's only a few candles, but we need to have something to reverse. And it's important to remember that. Sometimes people forget that because they're new, they're excited, they want to trade everything. Pin bar shows up, they're on it, okay? But the thing is that pin bar might be in the middle of nowhere, just in a strip of price going sideways, and actually that's what we're seeing, that's what we're expecting. So we always have that. It's about the context. Remember what I'm saying is about a confluence of events, okay? That's what good trades, and this is why having a little trading plan can work, all right? Simple tactical trading plan that, you know, you can just have, you know, I buy support in uptrends, I sell resistance in downtrends, I look for, you know, price action triggers at, okay, those particular levels that indicate either support or resistance, which might be a horizontal level of support resistance. It might be a dynamic one, like a moving average. It might be a big round number, etc. Just keep it nice and simple. All right, that's what we're looking for. So, you know, these are kind of the first couple of parts of that. So, you know, you might remember things like pin bars. I'm not going to go into it massively this week and stuff, but you can remember what we saw there last week. You know, pin bars, they should be very clear. They're very standard. Small bodies, big wicks, okay? That's what we're particularly looking for with the pin bar. If you want more of it, go back and have a look at the in-depth session that we talked about last week. So, as I said, let's just start to build simple price action trade plan. And this is a simple way, but we're going to start to build this. I will add more to it as we go through. So, one, identify significant levels of monthly, weekly, and daily charts. Even if you find yourself trading 30-minute charts, 5-minute charts, okay, it is important to know these particular levels, right? Because you don't want to be buying into resistance. You don't want to be selling into support as a new private trader. Wait for a price action trigger at those particular levels, all right, that we see the areas of inflection where the market has to make a move, it'll make a decision. Enter the trade on the break of the candle. That's a two thing, as in we need the price to trade through the high or the low of the previous candle, but also it ensures you don't do anything until that candle completes. I very often find that, see a trade, especially intraday, new intraday trader, they see what looks like, I don't know, on a 15-minute chart, it looks like it's a pin bar. Looks like it's a pin bar being created, and they think, oh, it's a pin bar, I'm going to get in ahead of the crowd, bosh, and they buy it. But actually that candle hasn't completed, and actually by the time the 15 minutes is up, it actually, the price has collapsed, and what we thought would be like, I don't know, let's say a bullish pin bar, it could be quite opposite, or it could just be a nothing candle, it could be a high wave candle, it could be a doji indecision candle, right? Remember, wait until the candle completes. We never ever trade without stop loss. Remember what we did a session a couple of weeks ago in terms of risk management, which was effectively like that. We never risk more than 1%, okay, per trade. That's your position sizing to start with. You always have a stop loss. Your stop loss is at the other side of the candle or the other side of level of support resistance, okay? Just, take a look at it and work that. And on the flip side, and we're going to talk more about this in a future session, is, you can have a target, okay? Either 2 to 1 reward to risk away, okay? So whatever your trade risk is, double it. Or perhaps the next significant level. If you've drawn them in, you might see the next significant level, and especially when it's big round numbers, as we'll look at in a moment. Those big round numbers, they become like a magnet, all right? Price just drifts up to those big round numbers. And the important thing is about record these trades, review these trades, and repeat the good ones. There you go. It's very, very simple, all right? I'm going to add more to it as we go through in future sessions, so that it becomes a full one that you can take away and utilize. But as a tactical trading plan in front of you, okay, to start with, just do that. Identify significant levels, wait for price action triggers, enter on the break of the candle. Stop loss is always the other side of the candle or the level, all right? Never risk more than 1% per trade, never trade without a stop loss, all right? Target of at least 2 to 1, okay, or not more, or the next significant level. Make sure you record each trade, make sure you review each trade, make sure you repeat each trade, okay? If you're doing those things, you're starting to actually just become a professional trader, right? As in, you're moving away from an amateur with a hobby towards a professional with a business, and that's the way we want to look at it. So we're going to look at the live charts, okay? We're going to switch, because I think actually that's probably the time to go. I want to look at these particular levels, but what we look at, and I think we had a look at this a couple of weeks ago and stuff, is about recognizing, once we've drawn in, and this is an old gold weekly chart, there's a lot going on in gold at the moment, we'll have a little look at it in a moment, is, we can see that basically big round numbers, 1200, 1300, and then if I just move myself up, 1400, okay? Big round numbers, okay? They are valid, okay? Treble zeros, traders, especially on the longer time frames, will see trades taken off it. We can see here, it rejected at 1200 before it rallied up, and then once we got to 1400, what did we get? Well, we got a bearish pin bar that was also a false breakout. Price drifts its way down, okay, to 1200. What do we get? Well, we get an inside bar followed by a bullish engulfing candle, which is a bullish pin bar and a bullish key reversal. All right, okay, because price pushed to a new low, but it closed higher than the high of the previous candle. And what do we know? Go all the way back up nearly to 1400 before we put in an engulfing candle before we drop down. And I was saying here earlier, remember what I was saying is that, we've got a couple of pin bars there, okay, at 1300 level. But what we're a bit worried about is, well, we're kind of in the middle of a range there, right? We're in the middle of a range, okay? Remember what I said? We want it to be something to reverse, a price action candlestick, something to reverse. So here, we can see we've had a good run up, haven't we? And it reverses nicely. Here, we've had a nice run down and it reverses strongly off that, okay? Just remember that. People forget that because they think it's almost too simplistic. Excuse me, but that is what we want to take on board, okay? We don't need to make it complicated. We don't need to sort of, we want to identify levels that, where a market has to make a decision. And that's what we can utilize that, okay? And this is a weekly chart of gold, but if this chart could be, a 5-minute chart of corn, could be a 15-minute chart of euro dollar, could be an hourly chart of the Nasdaq, all right? Once you start to identify those particular levels and look at how price action plays out there, it becomes much easier to be able to analyze that. And what we don't want to be doing is, we don't want to be trading in middle of ranges, because that generally just, there's nothing going on. Price action candlestick, right, is about, okay, it is about a reversal pattern. I know I've said that quite a lot this session, is because I want you to remember it. I want you to work off it. So let's go across to the charts, shall we? Because there's lots we can look at and talk about, okay? And that's, I appreciate that's what people like to look at. But in conclusion, price action analysis, it's a way of analyzing market using purely price action. Doesn't really require any indicators. It's a very pure form of technical analysis. Allows us to trade off clean charts. What is important, what we're talking about, is it's important to build a tactical trading plan. Okay, we'll do strategic business plans, down the line. But to begin, I want you to just start building a tactical trading plan. We did a little bit of a session on preparing for opportunity. We're going to do a session in the future on specific checklists that you can utilize. Okay, but the reason we want to plan is because it helps us plan our trades our plan, manage our risk. It keeps us from taking impulsive trades that go off plan. All right, it gives us a little bit of a framework, a structure that we can work on. We're always looking for price action triggers at significant price levels, and those things are what allow us to build a very simple price action trading plan. So why don't we have a little look at live markets? Let's see what's going on there. Let's have a little look. We've got about 10 minutes or so and stuff. So we can do that and have a look. There's always something of interest for us to have a particular look at. But before we go, just remember, or a reminder rather, that to join us next Wednesday, London, 2 p.m. The next session is going to be about the inside bar setup, right? Remember, we've talked about pin bars, we talked about key reversals, we talked about engulfing candles, we talked about star formations, okay? Inside bar, as the name implies, is a bar that is inside another one. Strange that, hey? But, what we're looking for is, well, what is an inside bar? How do traders, identify and trade them? What are the actual best setups? So be sure to join us there next Wednesday, 2 o'clock, 23rd of November, and we'll talk about that. In the meantime, if you've got any questions, you want to sort of contact Admirals, you can do so. The email address is there. And also remember, this session and all the previous sessions are on the Admirals Global YouTube channel and Facebook channel there, for which you can see the particular link there. So, I hope that's just started to get you to think about tactical trading. And we're going to do more on that as we go through. We'll tighten it up and we'll build it into something, okay, throughout the sessions, so that I wasn't just going to basically overwhelm you, okay, here today. We'll just build slowly but surely on what we can do. So if you'll bear with me for a moment, what we'll do is we'll switch across the charts and we'll have a little look at what's going on there. And we'll just, identify some of the ideas that we talked about earlier, not only in this session, but in previous sessions as well. So just bear with us a moment now and we'll switch across. Excellent. So I'm hoping that you can all still hear me, still see me, but I'm hoping you can also see the active trades as the Admirals platform here that we're talking about. You can see it there, okay? And what I have here is, this is the euro dollar against the euro against the US dollar, okay, on a daily chart. And as I said, basically, let's just start to do this a little bit easier and simpler. So here is the monthly chart, okay? So what I look to do is, I'm just going to, when I look at it, I start to identify where are all the particular extremes, okay? I want to put them in. Let me just change the visualization of it. Gosh. Okay, come on, let's do that. Yeah. And so, what I look to do is I'm looking to identify where there are significant levels that prices has bounced, okay, from the monthly chart. I can see there. Okay, you can see this particular zone and area there. That's what I'm interested in. You might see these little sort of triangles, these applets on the chart. Those are fractals. Okay, you can find them here. Insert indicators. Bill Williams. Fractals. Okay, and I'll do a session on fractals there. And I think myself and my colleagues have done other ones on fractals, so there'll probably be ones on the YouTube channel anyway. But it's a simple price action indicator, okay, that we'll talk about more. But what I find it also helpful for is, when I start to see lots of them around particular levels, okay, that just gives me an indication that there's a significant level of support resistance there. What I also have on my charts, if you're joining us for the first time, is I said, I have, I've got the red and blue candles here, fractals, and then I have a blue 20 period moving average, a red 50 period moving average, and a green 200 period moving average. And I tend to utilize them as levels of dynamic support resistance. Why is that dynamic? Because it's constantly changing and updating and moving, and that's what I'm interested in. Okay, that's what I'm particularly looking for. So, when I'm particularly starting here, okay, on the monthly, just identifying where I've seen lots of prices bounce, okay, lots of prices maneuver. Then I'm going down to the weekly chart, okay, and you can see there's lots in there. And what happens is that what the ones I've drawn in from the monthly, they're very they will stay there, okay, and they're very useful there, okay. And what I can do is I can alter them and tighten them up if need be, or if there's particular levels. I can also draw in significant levels. So here on the euro dollar, here we go. Look at that. That is parity, one level, and you can see for yourself that has been in a very good trend, hasn't it? Remember what I was saying? Okay, it's a tactical trading plan. What we want to do is, if there is a trend, okay, and in this case, is a very clear downtrend because we've had euro weakness and dollar strength. Well, remember what I said there? I want to be selling rallies, okay. I want to be selling pullbacks, okay. Every time price pulls a resistance, I want to be selling it. So, in this particular case, on the weekly chart, I'm going to look more on that. On the weekly chart, we can see that price is in a downtrend here. What happens is it pulls back. What does it give me there? A little inside bar followed by a pin bar, and away it goes. All right. Comes up here. What does it put in there? That's an evening star formation, and away it goes. Pulls up, bounces off the big round number. Price pulls back. What does it do? Put in a pin bar there, okay, and it drops away again. And now we're starting to see maybe a shift, maybe a change, okay, and that's what we'll look at. So, there's as I said, that parity number there we've had over the last month or two, okay, couple of months, we've had price maneuvering its way around there. And if I go down to the daily chart here, what we've also seen is over the last couple of months, all right, remember what I was saying is that we've seen actually quite a lot of very simple price action trading opportunities. So here we go. Price, you can see that weekly we'd already identified as trend down from the weekly chart. If I go down to the daily chart, okay, see once again we've got the 20 period, the 50 period, all right, and the 200. I can start to draw in more particular levels if I wish, because for example, let's just put this up here. Lots of really lots of fractals there, okay. That's the price is just bouncing off that for various reasons. That's what we're in. But what we're also interested in is, let me just clear all these drawings, is what we can see is price is in a downtrend, isn't it? And then price bounces off a level of this 103.50, bounces off it, rallies up. What happens? It hits the 50 period moving average, which is also we can see that 107.50 area. And then what happens here? Puts in a very strong engulfing candle before it drops. Price pulls back to the 50, bounces off it. Then here it bounces as a pin bar there, okay. We talked about pin bar. People do like to use pin bars as ends of trend. Personally, it's an indicator, but I prefer to basically see what happens is when price pulls back up here to this 103.50 area, which is clearly is being support, is now resistance, okay, and it also has the 50 period moving average, and we've got a little bit of a rejection candle pin bar there. Remember what I was saying, okay. What I want to do is I want to see that it is, the candlestick is going to give an indication there's going to be a reverse, and I want a confluence of events. I want 2, 3, 4 things all together to come at time and place. That's my trade, okay. That's a simple price action trade. We can see the price basically fell away, didn't it? Fell away, and where did it run to? Not unsurprisingly, it ran down to parity. Price pulls back up to that 50 period moving average. Remember what I was saying is I'm using that 50 period moving average as a dynamic level, in this case of resistance, because what we see is every time price comes up to it, it falls away, comes up to it, falls away, comes up to it, falls away, comes up to it, falls away, comes back up here and is in the area of parity, falls away. But here's the interesting thing, okay, and this is where I can quickly do a bit of analysis. When price drops here, what it does is it prints a key reversal bar there. Price pushes to a new low, but actually climbs up and closes higher than the previous candle's high. Price polys up to the parity 50, drops again. What does it put in here? Puts in another bullish engulfing key reversal candle, which is also now, all right, at higher low. Price rallies up a bit, comes back, prints another one. So now we're starting to get an indication, well, hang on a minute, maybe this downtrend is running out of steam, okay. And we see price polys up and it drops down again, okay, before it rallies strongly. But once again, okay, we're starting to get lows which are higher. And we're starting to get, remember, that 50 period moving average, which has been fantastic resistance, is now flipped, okay? Here we got above it, we come back down, now we're above it, and we're staying above it. And now what's happened is we've hit the 200 period moving average, and what did we do yesterday? You know, we put in a really big, strong pin bar rejection candle at a level, 103.50, which has been quite significant in the past. So just, you know, two charts there, you know, in terms of euro dollar on the weekly and the daily, you know, you're able to very quickly start to analyze. You know, there's a very clear trend in that. That's what we like to work with. We can see that. That's what we can work with, okay? Remember, you know, if there is a trend, what we're looking to do is we're looking to, you know, sell at resistance in a downtrend, buy at support in an uptrend. But ideally what we want to see is that confluence of events, 2, 3, 4 things coming together, time and place, traders on, all right? And if we look at a couple of them here, so what have we got next here? Yeah, here we go. The dollar against the Swiss franc. That weekly chart there, okay? And, you know, once again, let's just go up to the monthly chart a little bit. Let's quickly do a little bit of just a quick bit of analysis. Okay, so, you know, I'm interested to see where price has really got to extremes, okay? Because, you know, it may get back there. Might take decades, but I want it there on my charts. What I can see is, you know, there's lots of a couple of levels there on that monthly chart where prices of interest. Remember what I say is that very often there the fractals will help me, okay, to just identify. Let's just, here we go. So then for when I've got quite a few of them in you know, in a particular sort of area where I see them, okay, we'll do it. Or I might even just trade, you know, just draw a trend line when it sees it's very clear there, you know, there's fractals there and what have you, moving it away there. Also, big round numbers, there's parity again. We've had parity on euro dollar, but even if you look at the monthly chart here, you know, it can very often pivot around parity, and that's what it's done there on that monthly chart. If we go down to the weekly chart again, let's zoom in a little bit. What we had of interest here was, you know, price rallied its way up to parity, big one, and then dropped away. Price rallied up to it again, dropped away. Now, you know, here a weekly chart, that is a big bearish engulfing, a big bearish key reversal candle. It then prints, you know, a rejection candle of sorts. You know, these are very big, but what we can see is it drifts its way down to the 50. And what does it do? It bounces all the way up again. But interestingly, it gets back up to parity. What's it doing? Puts in a rejection candle, puts in a very big rejection. You know, we've got rejection candles at, you know, at that one parity before last week, bosh, it drove down. You know, if price cannot get above one and hold above it, well, then it's going to fall away. And that's what we saw there. Okay. And that's an indication of, as we've seen in the euro, maybe the euro switched. Okay. There's a little bit of euro strength and dollar weakness. What we're also seeing here is dollar weakness and Swiss franc strength. And, you know, for price action traders, we had a little bit of a hint this was coming, because in the daily chart, some really nice moves here. Okay. But what we saw here is, once again, price gets up to parity. And what does it do? Okay, it prints a bearish key reversal candle, which is also a rejection candle, pin bar candle. It's also an engulfing candle. Okay, remember what I said, you know, in the piece about key reversals. If a key reversals are very rare. Okay, if they print, the end of the trend is nearby, or, okay, you know, it's either there or it's coming very close to it. Okay, so you want to sit up and take notice of it. All right, so when you get a key reversal here, okay, price runs down. When you've got another bullish key reversal here, price runs up. Okay, and then price basically puts in, you know, that one there at parity. Okay, at parity. And what happens is we create this standard double top, okay, which then basically price, bang, collapses all the way down from. So remember what I was just saying, price action. Okay, it's about, we want to understand price action triggers, but it's where they occur. Okay, it's where they occur. Are they occurring, at a particular level? All right, is it a particular level, like a big round number, or, you know, a horizontal level of support resistance, or perhaps, you know, a moving average, a dynamic level of support resistance? You know, people can trade just off that with that. Okay, pound against US dollar, you know, what we've seen today, here's the weekly chart there is, sorry, this is a daily chart. Okay, and, you know, once again, what we could see was that, you know, it was in a very clear downtrend. Every time it extended, it pulls back, doesn't make the 50, okay, but drops again. What stops it? Big round number, 120,000, 120, okay, bounces off it. comes down here and works its way down. But what happens is the price comes up to the 50. What does it do? Bounces off it, and runs. Then we have, you know, a real fall away, and they very often call it a kangaroo candle. And as prices moved its way back, I remember a bit just like what we were talking about the euro, okay, we're starting to get effectively, okay, lower, higher lows, okay, that's giving us an indication that, do you know what, maybe the downtrend is coming to an end. We get above the 50 and hold above it. And then what did we see yesterday? Price come back up to that 120 and rejected it. Now, of course, it's not really a surprise. You know, here in the UK, we've got our autumn statement tomorrow. That's going to have an impact on GBP. But you can see for yourself that actually, you know, price has come up there and it's rejected it. Okay, that big round number. Now, you know, shorter time frame traders would be looking at how that price reacted there. Okay, and giving opportunities. What I want you new traders to recognize is just, you know, those big round numbers, the big 000 numbers. Okay, they are valid. They're reference. Okay. Let's have a look at dollar against Japanese yen here on monthly charts. You know, the monthly chart here, just drawing in, you know, significant levels of extremes, okay, or levels where I see that, you know, there are lots of particular fractals that are of interest, okay, or relevance to me that I can work with, okay. You know, and I'm just very quickly on the monthly. It doesn't take long to do, all right. But you can see there's been a huge trend up there. Okay, this year you really only had to buy the dollar and sell the Japanese yen, and you know, you were quids in, so to speak. But let's have a look at here, the price action here, okay, on the weekly chart. Okay, on the weekly chart, you know, yes, we had a very strong uptrend. Price pulls back to the 20 period moving average, puts in a pin bar, price rallies up. What we had here, price gets into the big round number 150, and what does it do? It prints a rejection candle, a big bearish pin bar there. Okay, that starts to make people start to sit up and take notice. And then when we go down to the daily chart, what do we do? Well, you know, we had here, this is an engulfing candle. This is a key reversal candle because it pushed to new highs before it closed beneath the lows of the previous candle. You know, it's also an engulfing candle, and it did it here. Now, these were these two instances of intervention by the Bank of Japan, but once again, price had got to the big 150, pushed to a new high, closed, okay, beneath the low, well, in fact, a close, you know, about half a dozen, 5 or 6 candles there. And then what we saw was price starting to move down, okay, price starting to move down, bosh, before it dropped. And where's it dropped to? 140, that big round number, okay, an area where, you know, it has literally reacted again. So hence why we want to be drawing in those levels as often as we can, recognizing them, okay, and when we start to see price reacting. And as I said, in an ideal world, okay, in a nice daily chart, when you're in a very clear uptrend, you want to be trading with it. But, you know, nothing ever lasts forever. And when we start to see it, big round numbers, okay, and we start to see big round numbers, you know, confluence events where we're getting price action, just giving the indication that that trend is ready to roll over, that is something that we can work with, okay, and operate. I'll just finish with dollar CAD because I appreciate we're running out a little bit of time. You know, dollar CAD monthly chart, price had come up into these areas where big wicks. This is the monthly chart from years ago, and you can see I've just drawn on those levels, you know, just on the monthly chart. Go down to the weekly chart, okay, and we came up back into this. We can see there's a real element of you know, real cluster of trading there, okay, real sort of area of supply before price fell away, okay, and then prices come up and rallied up. But when I look at the daily chart, okay, this is what is of interest to me, is that, you know, we've been in a very clear uptrend there, and then what do we print here? You know, price pushes to a new high, but rolls over and closes beneath the low of the previous candle. It's a bearish key reversal just underneath the big round number of 140, just underneath there, okay. So, you know, that in itself, remember, you know, if you're going to trade in it, you need to have something to reject. Key reversals don't happen very often, but it's been an uptrend, and what we see is that basically price winds its way down, and we've gone from being just underneath 140 to just being above 130 there, okay. So there's been about a 700-800 pip drop there, okay, just in that move. And for those of you of you know, who like using price action moments, well, that is also a head and shoulders pattern there that we can see there, okay, which is a standard reversal pattern in technical analysis, and it's played out there nicely by price action there as it's come back down to this particular levels of what were resistance, and now you're looking to see if they are support. So there you go, ladies and gentlemen. All right, okay. Unfortunately, we've run out of time. Time flies when you're having fun. But remember what I was saying at the start is, you know, a tactical trading plan doesn't have to be perfect. Okay, just sit down, take a piece of paper, start writing it out. Okay, just, very, very simple. Okay. For price action, monthly, weekly, day, draw in horizontal levels of support resistance, any particular patterns. Okay. Identifying any particular big round numbers, because you'll see price responds and reacts to them, then go monthly, weekly, daily. If there is a trend, well, what we want to be doing is we want to be buying at support, selling at resistance, in a downtrend. And if we've got a confluence of events, that's what we're looking for. Price action triggers at points where market needs to make a decision. Seen there, okay, just simple price action setups, key reversals, engulfing candles, pin bars, okay, for star formations, inside bars, which we'll cover next Wednesday for joins. They're all there, and you can just keep it nice and simple in terms of your particular trading. And in future sessions, we'll look at, entries, and we'll look at actual targets. But, today is about getting you into the routine of being able to do that. So as always, as I said, our next session is next week, next Wednesday. We're going to look at inside bars. I hope you'll join us for that. Until such time, I wish you the very best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week, and I will speak to you. I'll speak to you soon. Many thanks.